Not a great day for tech investors today, as we can see the Nasdaq was down roughly 1.9% as I am recording. The main culprit, these two giants. Alphabet is down roughly 9% today, and Microsoft is down over 7% as I am recording. The main reason, these two companies just reported earnings, and unfortunately, it's not what investors were looking for. If we start off with Alphabet, they missed third quarter earnings expectations and reported a decline in YouTube ads. To kind of keep things in perspective, revenue was $69.09 billion versus what analysts were expecting of 70.58. Earnings per share were $1.06 versus analysts' expectations of $1.25. If we take a closer look at Microsoft, they actually beat on both the bottom and top end. Unfortunately, cloud is slowing down compared to what analysts were expecting, and also they might have given a bit of a weaker guidance than previously anticipated. So let's take a closer look in today's episode, and I'm also going to share my overall thoughts on these two giants. So let's get started.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Alright, let's start off with Google. Even though they did miss expectations, revenue was $69.1 billion, up 6% year over year. We can definitely see the currency exchange rates are affecting this company, because if it was on constant currency, the company would have been up 11% year over year. Unfortunately, margins are also taking quite a hit. We can see the same time last year, margins were 32% when we take a closer look at operating margins versus 25% right now. Here we can see that there is a decline in two main segments. First, YouTube ads. Same time last year was $7.2 billion. Right now, it's not even 7.1 billion. Management did mention that there's still kind of short-term headwinds here in the advertisement market. Mainly companies are pulling down some of their budget, and also just kind of a slowdown with everything that's happening around the world. The other market that was down was also Google Network. And I do believe YouTube ads is probably where most investors are fearful. YouTube is something we keep hearing being a strong growth for this company, but it's not showing that growth in paper. So I do believe some investors might be scared with the current numbers that we have. During the earnings call, management does say that they're still working on monetization, for example, YouTube Shorts, and they still have plenty of tailwinds for the kind of market YouTube provides, which is not only short-term video, it's also long-term video, it's other kind of advertisement and shopping, and also their connected TV with YouTube kind of live. So even though YouTube ads has taken a hit, I don't personally think it's a huge deal. Like we saw those operating margins going down, one of the things that many investors are discussing right now is how much employees Google added in the year alone. And if you want to take a closer look at the transcript, I definitely say go to Google's Investors Relations website. They have the full transcript available for us investors. But we can see from this Morgan Stanley analyst, they mentioned that Google has added about 51,000 new people to the company since the start of last year. And this is pretty opposite of what kind of management is saying. They mentioned over the past quarter, they made several shifts away from lower priority efforts to fuel higher growth priorities. So some people might be saying, hey, how are you kind of prioritizing high growth but still focusing on hiring so many people at once? And they mentioned that their quarter 4 headcount addition will be significantly lower than quarter 3, and 2023 will even be even slower with the way the current market is going. But still, 50,000 plus people is insane, and I can definitely see why certain investors might be upset. So to be my overall thoughts, I'm still very bullish in YouTube, in Google, and just Alphabet in general. They are focusing a little bit more in hardware right now. They did release, for example, the new phones, the new watch, and are focusing more in the mobile market than previously. I think that's a very bullish case as the world continues to go mobile. They're still focusing very heavily in cloud. We can see Google Cloud has grown a nice amount. Same time last year was roughly 5 billion. Now it's roughly 6.9 billion. Another thing I do want to mention is Google Cloud, even though it's still losing, the overall losses this quarter, even though they grew dramatically in revenue, losses barely grew. So I think it's showing us that Google Cloud has kind of hit that peak of losses to some extent. And now as more revenues is coming in, we're most likely going to see those operating loss decrease a bit and hopefully in the future become a positive operating income for the company. So there are numerous reasons to be bullish on Google, on Alphabet. I've actually done a video before. Make sure to check it out. And also, if you're enjoying the episode so far, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. So now if we take a closer look at Microsoft, at the moment it's down roughly 7%. And we can see Azure's revenue grew 35% in the quarter, but unfortunately analysts were expecting a growth rate of 36.4. I mean, to me, Microsoft is looking better and better. Again, in the short term, we might continue to see numerous volatility or headwinds for this market, but I do think in the long terms, Microsoft is going to be a great investment. I mean, we can see revenue was $50.1 billion, up 11% year over year. If it was for constant currency, it would be up 16%. Unfortunately, net income has taken a hit, down 14% right now, or down 8% in constant currency, but we can see net income is still $17.6 billion. If we take a closer look at the revenue segments, productivity and business process grew 9%, intelligent cloud grew 20%, more personal computing was flat, but remember, with an unfavorable currency exchange due to the strong dollars, and again, all the other macroeconomics we're seeing, like the slowdown in PC shipments. So for them to even see a flat there, I personally believe it's super impressive. Some of the key points, Azure, like I mentioned earlier, grew 35%, up 42% on constant currency. More personal computing, Xbox content was up 3%. What got me excited about more personal computing is Xbox hardware revenue grew 13% year over year. And remember, this is not the first year of the Xbox Series console. So for it to still be growing 13%, normally the gaming consoles tend to decrease yearly after initial release, but we can still see a huge growth. Obviously, that market last year when it was originally released saw a bit of a stalemate because of production and the overall chip shortage, but still to be seeing strong demand for the products, I think is super impressive. They're still seeing growth in Xbox Game Pass subscription, which is their clouding, their Netflix for gaming, which I believe is doing super well. So to be seeing Alphabet and Microsoft down so much right now on tech companies that I believe will continue to fuel the future in growth, especially in the clouding market. We see Google with its advertisement and the YouTube side. We also see Microsoft outside of the clouding with also its gaming and its kind of enterprise solutions. And for me as an investor that still dollar cost averages on a weekly basis, I do believe these are gifts for the long term of things. At the same time, we all know the market can continue to be crazy, so always only invest what you are comfortable with and whatever lets you sleep at night. So take care, have a good day, and see you next time.